This is On the Money with Ryan Wheelis, financial advisor and the founder of Allied Wealth. Offices are all around the Texas area, but if you're watching us on the YouTube, you can also call that phone number or go to the website and schedule an appointment. We can do it over the phone. We can do it over a Zoom call. Somebody from the team would be glad to talk to you about your financial flight plan.
And Spike, by the way, when folks call in or we do a Zoom call, we work with people all over the country, all over the state of Texas. But, folks, really, it's really simple. We don't charge for these calls. We don't. I've got one question for you. What are you hoping to accomplish on the call today? Let's figure out what that is. And if my team of experts and I can help you add value to what you're trying to accomplish, we'll talk about doing that. If we can't, we'll let you know. We'll point you in the right direction of where you can get some good help. That's simple.
Yeah. I was so glad you said that because I was just about to remind you of that. Adding value. If somebody is already doing okay, if they don't have any red flags, if they're covered with things like long-term care and their income and their Social Security is already pretty optimized and they're good with their taxes, I mean, you'll take a look at things and go, you're doing all right. Let us know if you ever have any questions. If you can add value to what they're doing, you'll help somebody.
Spike, that happened yesterday. We had a client come in to one of our courses, came to a course lab. We did a complete x-ray of their portfolio. They were with the same company for a long time. They rolled their money over from that company's 401k plan, small company, to a financial advisor who worked with them during their career as a 401k plan advisor. And they were really comfortable with her. The only thing they didn't like is they couldn't see her eye-to-eye, belly-to-belly because it was in Ohio, and they're here in Houston. They didn't love that, but I mean, they really like her, and we checked everything off and said, quite frankly, guys, that this all looks good. I mean, I don't, the only area for improvement is being able to see someone eye to eye, belly to belly, and that's helpful. But other than that, this gal's doing a good job for you. So if she makes a misstep or you want to work with somebody local, let us know. But you guys look to be in good shape, and thanks for coming in. We appreciate you, and be well.
And for our radio listeners, right? I'll throw it out right now. 844-944-7555. You call that phone number live during the radio program. There are operators standing by. We'll schedule an appointment for you. As Ryan says, there's no cost. We just want to see, can we add value to what you're already doing? Can we maybe show you some things that are blind spots to you, some speed bumps down the road, things like inflation that you might not be accounting for, or exactly when do you take that Social Security to optimize it, not necessarily maximize, but to optimize your dollars in Social Security.
Can you spend $15,000 a year on travel? Mm-hmm. Can you spend $20,000 a year on travel? Can you buy the bass boat? Should you buy the trailer? Should you buy the RV? Should you sell the house and go on the road in the RV? Should you move to Portugal? These are all questions that we answer, Spike.
Yeah. So a good and bad here report I have. So the Social Security Trust Fund, we've heard all of the warnings on it, on how it could be depleted by as soon as 2033, 2034. The newest report came out. It's currently saying 2035 now. I think because our markets have done well and because interest rates have gone up over the last couple of years, but we're still possibly looking by maybe 2035, a 17% reduction in Social Security benefits if Congress, President, if they do nothing. Now, here's the thing.
Which, by the way, they're real good at doing nothing.
Uh-huh. I can't believe they're still kicking this can down the road. This is the retirement of our United States. We have millions of people in retirement. They rely on the Social Security. The fact that we're talking about a possible reduction is ridiculous to me. Ryan, we're going to vote for you to go into office. You need to go to D.C. and fix this for us. No, you're too busy.
There's a guy I have a tremendous amount of respect for named Morgan Luttrell, who's Marcus Luttrell's brother. He's up there on the hill right now, and that guy, he's learning a lot. And if he can't do it, there's no way I could do it. That guy can kick my butt up and down the street, But I just don't know, man. It's one of these things where it's a game that I don't want to play. I really do wish there was an overhaul to the system, and I think it's a detriment to our country that we can't find better people to run the country. It is what it is. So
me too. Looking for our leaders, people we can get behind. But the Social Security Trust Fund, it's essentially invested in U.S. government debt securities. This makes sense. It makes sense that it's gone up a little bit over the last couple of years because so have interest rates. And they're relatively stable because it's backed by the full faith and taxability of the United States government. There's about $2.9 trillion currently in the Social Security Trust Fund. We're also $35 trillion in debt right now. I wanted to ask you, because I know you are also, and you still do this as a portfolio manager for clients, and you work with several portfolio managers. How would you invest the Social Security Trust Fund? Is the 4 or 4.25% of the Social Security Trust Fund a decent, safe, reliable amount, or would you take a sum like this over a 30-year period and invest it a little differently?
Spike, the first thing I would do is I wouldn't even look at the investments of the trust fund. I would completely overhaul the ages at which you can get Social Security. They would be pushed out starting for people that are at 50 now and 55 now. Those ages would be pushed out. That'd be the first thing I would do. So kind of a restructuring of the system first, okay? And the parameters around when you can claim Social Security and that sort of thing. The next thing I would do is I would look at trimming any fat. Like, are we bleeding money someplace? Are we, is there some waste going on here that we can eliminate? You do those two things, and what that allows you to do is to take less risk with the money in the trust fund, okay? Because you've just taken the need down, and you've taken the pressure off the nest egg, if you will, to produce waste or overfunding of Social Security or people getting it too early, because people are living longer. We need to recognize that fact, okay? The next thing I would do is I would give people the ability to opt out of the system completely by writing a very large check. So if you want to buy yourself out of Social Security, you can do so. Here's what it costs you. Here's how to do it, okay? You can do it over 5 years, 10 years, but one way or another, you can buy yourself out of Social Security, which means you don't pay Social Security tax anymore. That's done, okay? That's the next thing I would do, all right? Lastly, what I would do is look at the investments in the fund, and I would look at ways to increase the return on the fund while taking less risk. I would look at outside of government treasuries. I would look at things like private credit, where you can get higher yields and with nearly the same risk level that you would have in bonds. Now, they say government securities are the safest thing in the world, and I do believe as long as the dollar has value in your bank account, that is true, okay? But it doesn't mean there's not ways out there to increase return on your capital and take a similar risk level. Not the same, but similar risk level, all right? I would look to move some of it to some private equity. Private equity, Tony Robbins has actually gotten into the investment world in a pretty big way here in the last 10 years. Done a lot of research and he's written 2 books, by the way, which are very good books. Anybody who's trying to save money for retirement should take a read of them. And Tony's actually become a billionaire himself, by the way. And so he's looking for ways to deploy his capital. And what he says is the holy grail for him has been private equity funds. So I would certainly look to diversify into private equity. Now, private equity, you can have income funds, you can have real estate funds, direct investment, you can have roll-up acquisition and that sort of thing, and alternative asset classes. So all those are avenues that I would look at. I would also look into real estate. I would look primarily into housing and apartments is where I would look. And can we deploy some capital into apartments? I think apartment living is going to be a big thing as we continue to move forward in this nation. And I think there's some good yields and good returns with some relatively low risk to be made in those areas.
With just some of these examples, are you doing that for clients with Allied Wealth, or has this been, as you're talking about the Tony Robbins, has this been more speculative for a different class who are willing to take a little bit more risk?
Spike, we do these things for our clients at Allied
Okay.
Wealth for sure. So, and that's there's more to it because we would also look at some stock portfolios, largely individual stock portfolios, by the way, instead of mutual funds and that sort of thing. I think you can do a better job with individual stocks than you can with mutual funds. There's a plethora of reasons behind that. So we'd look there. We'd also look into cryptocurrencies. And cryptocurrencies are here to stay. They're not going anywhere. And then lastly, we would probably look into a baseline utilizing some really well and properly structured annuities to have a baseline of income coming in. Use the other things for longer term growth, future obligations that I mentioned, like the private equity stuff, the stock stuff, the real estate stuff. And that's kind of what we would look to do. So what are we doing? We're making sure that the current needs are met. We're making sure that tomorrow's needs are met, and we're making sure that we're growing the overall fund to combat the erosion of purchasing power through taxation and inflation over time. And that's a high level of what I would do if I was
if you were
in charge
investing
of
in America's
Social Security
life
fund.
savings.
Yeah, for sure.
The Social Security Fund. Hey, we got to wrap up this segment for radio and for the video here as well. Explain what the Portfolio X-ray is, though, for folks before I leave.
Spike, that's part of our investment consulting, the investment consulting piece of our offer, which is a small portion of our offering, folks. But that's really just taking a deep dive of your portfolio and making sure that you are, in fact, aware of all the options available to you. You're not missing something like the holy grail, according to Tony Robbins, like private equity funds, okay? And finding out if we can increase the efficiency of your portfolio, potentially do a better job than what you're currently doing to make sure your current needs are met, to make sure your future needs are met, and make sure that taxation and inflation are not eroding your purchasing power over time.
Call 844-944-7555 if you're listening on the radio live right now. Folks are standing by. You can also dial that number just into your phone or have the passenger do it if you're driving around and at least get that number in there, and then you can call later, schedule that appointment, 844-944-7555, where you can go to the website and you can schedule your own appointment. Go to retirenowhouston.com or retirenowAustin.com. And if you're watching us on the YouTube, call that phone number as well. We're glad to help you wherever you're at. More On the Money with Ryan Wheelis on the radio when we get back right after this.